rental at a time. And we're going to start off the show by showing your main man, Sonny. He insists on sitting on my lap as we do the daily financial news. So if you want to say hello to Sonny, go ahead and do it right now. He is so much fun. And and then Happy if you want to know she's over there. But anyway, so the daily financial news, lots and lots of stuff going on. Thankfully, a lot of stuff we've been talking about, a lot of stuff we've been calling and kind of pointing at. Let's just get into it because there is so much. My goodness, where do we start? Well, let's start with PPI, right? We had CPI yesterday, Consumer Price Index came in at 8.5%. I went ahead and did the recalculation based on correcting rent. Rent was estimated at 5%. I used 14. Instead of 8.5%, we are over 11. I think it was 11.6 or 11.7. So again, CPI is bad. PPI came in today at an economic record. Now, this data doesn't go back very far. It doesn't go back the same length as CPI, but PPI came in this morning at 11.2%. It is not getting better. If you don't know what PPI is, it is basically wholesalers. What are wholesalers paying? And they are up 11%. Many people, myself included, look at PPI as the leading indicator. It is not a one-to-one direct indication, but I do believe it is a forward-looking, which says that inflation may not have peaked, or at least continues to be bad. On top of that, we do have the number for CPI. A lot of people are breaking down and talking about, did inflation peak? Did inflation peak? When you look inside CPI, the different factors, it was definitely oriented towards energy, oil, definitely food, and definitely rent. Although, as we've said, rent could have been worse. Inside the CPI, if you were looking for good news, you could find it. We saw for the first time a break in used car prices. Used car prices are up 40%. Yes, folks, all of this, I do believe, is caused by the Fed, some supply chain, but definitely exacerbated by cheap money. That was reiterated by CarMax. I believe CarMax earnings yesterday should be a wake-up call. What did CarMax tell us? CarMax told us that consumers have quote-unquote sticker shock. If they have sticker shock buying a car, what the hell do you think they have buying real estate? Other thing that CarMax told us is their buyers want longer and longer terms. They talked about 72 months not being long enough. It is without question the 40-year mortgage is going to become a standard. The affordability in housing today, as I discussed yesterday, is not good. It is bad. It is going to stall the housing market. Not good. Not good. Again, I stand by my call of transactions falling at least 25%, and I believe over the next 2 years will be 50% peak to trough. Got a report from the Mortgage Bankers Association. It is really odd when, you like National Association of Realtors, right? NAR, I think his name is Lawrence Yun. Generally, everything is great in housing, right? He's got to say stuff like that. So the Mortgage Bankers Association, you would generally think, wants to report the most rosy picture of mortgage. They came out and said, folks, buckle up. Mortgage demand going down at least 35.5% this year. Refi demand this morning down 62% already. Purchase demand down, and it is going to get worse. We have only seen rate increases like this one other time, and the outcomes are pretty predictable. Slowdown in transactions. Let's talk about JP Morgan. JP Morgan kicked off earnings today of the big banks, and it was, I think JP Morgan would call it a mixed bag. I would call it a miss. JP Morgan's hit on revenue or top line, missed on earnings. JP Morgan put out a lot of things that you and I should pay attention to. First off, their profit, like I said, would be, I said this over the weekend, profit at all the banks are going down. JP Morgan led with a 42% drop in earnings year on year. JP Morgan is the largest bank in the country by assets. They led with a 42% drop. Not good. JP Morgan is back to taking reserves. Remember, we talked about loan loss reserves. We talked about all the banks taking $7, $8, $9 billion in loan loss reserves. It is, they took what, 900 million, so not quite $1 billion, and they allocated 524 million in losses to Russia. So again, they took basically 1.5 billion in loan losses in reserves. JP Morgan says he sees downside risk to the US and worldwide economies. He is starting to see a recession in the future. Not good. Where else do we got? I got so much stuff today. There's a lot of stuff. Oh, Wells Fargo. Wells Fargo is decided to sell a building in San Francisco. San Francisco is has its own challenges. And Wells Fargo wants to reduce its footprint in San Francisco, selling a 14 or 15-story building, wants to cash out and have less of a footprint in San Francisco. Mark Palin, Fannie Mae Deputy Chief Economist, he expects transactions in houses to go down 6%. Lawrence Yun, Chief Economist of National Association of Realtors, expects housing transactions to fall 10%. As I have said to you, I expect transactions to fall 25% this year and 50% peak to trough when you look at numbers next year. Looks like airfare and vacations are going to get more expensive. JetBlue and others have come out and said that they are going to be raising prices. They are reducing capacity. Hence, airfare has gone up 20% inside CPI, as reported yesterday. Looks like the administration has been calling this Putin's inflation. Actually, they called it the Putin price hike, which I think is highly disingenuous. It is just disingenuous. It has been around for a while and growing long before that. It is certainly exacerbated by the aggression in Europe and not going to get better anytime soon. But that is a very, I think, misguided way to spend it. Joe Manchin, Democrat Joe Manchin, is out hammering the Federal Reserve and the administration for failure to act with discipline, and their half measures and half-hearted attempts. Joe Manchin is not happy. I do not see Joe Manchin getting anywhere close to approving Build Back Better. As we talked about on Monday, I believe, Joe Biden is looking to reinvigorate Build Back Better and another $1 trillion of spending. Given what Joe Manchin is saying, he ain't touching that with a 10-foot pole. 4.4 million people quit in February. I thought that was just an amazing number. Federal Reserve, Thomas Barkin, Federal Reserve President, of Chicago, I think. I didn't write it down. I think he's from Chicago. Thomas Barkin says, we have got to get back to neutral. we have to watch the vocabulary of the Fed because neutral is a term that they throw around very loosely. Neutral isn't really a number, it's a range. Right now, most people argue neutral is 2.5, 2.5 to like 2.75. And we are sitting at 0.25. So if we were going to get back just to 2.5 this year, that means we need nine Fed rate increases of 1/4 point. Folks, there are only 6 meetings left. So that means at least 3 of the meetings this year need to be the jumbo 50 basis points, or we will have 2 50 basis points and 1 3/4. I am in the camp that the Fed needs to be aggressive, and we'll get there. As we've talked about, some of my other experts, frankly, think I am wrong and think the Fed will wimp out at about 1.5. So we shall see very, very soon. The supply chain is not going to get better anytime soon. I just read an article about 500 container ships stuck in China, not there to unload or reload. I expect the shelves at Walmarts and Targets and all these places to be a little more empty as we move forward. We talked about Delta Air. Actually, I don't think we did. Delta Airlines reported this morning a smaller loss than expected. Good for them. And more importantly, Delta Airlines is forecasted to be profitable in Q2 because of rising prices and rising margin. Bed Bath & Beyond. Woo! Bed Bath & Beyond getting smoked. Bed Bath & Beyond is suffering from rising shipping costs and inflation. They were expected to earn 3 cents a share. They lost 92 cents a share. They lost money, everything they sold. Not good. So again, folks, it is very interesting out there. I had a comment yesterday talking about the global financial crisis and comparing it to today. I went and collected 6 or 7 variables. I just recorded it. This will be in the whiteboard playlist. I have it scheduled to go live at 1 o'clock today, Pacific. I will highlight, again, stuff that you and I are talking about every day on the daily financial news. The misery index, the Jimmy Carter index that has not been talked about in a while, needs to be. The misery index today is worse than the depth of the financial crisis. Folks, all of that's coming to you at 1 o'clock today. It will be in the whiteboard playlist. If you miss it, have a wonderful day. We talked to Anna, Adrian, and Matt, the mortgage guy, today. We missed Matt yesterday, so we will talk to him today. It is going to be an awesome day. I hope you have an awesome day. Take care. Bye-bye.